sales growth of a company shows an increase in sales over a period of time. So this sales growth is important to an investor, as you would want to know if whether the products or services that the company offers are going to be in demand in the future or not. Meaning that if a sales growth of a certain company are increasing over time, then this ought to be taken as a very good sign that services and products will be in demand even in the years to come. Now, with all that, a sales growth of 5 to 10% is considered to be good for the large cap stocks, while a sales growth of over 10% is achievable for small to medium stocks. Otherwise, with all that, the pandemic led to a boom in online shopping for South Africa. This is simply because so many people have gotten used on doing online shopping, which is something that I truly believe that we are going to see this kind of online shopping demand continuing to grow, because it looks like, as I'm saying, people are getting more and more comfortable, and so many people nowadays are lazy to sort of like go to the physical shops, which is why you would see them ordering like your groceries and other products online and get them delivered at the comfort of their homes, which is why I certainly believe that this is the kind of trend that we will continue seeing in the world even in the years to come. Otherwise, without wasting any more time, on today's video, guys, we'll be looking at the breaking news that Woolworths just announced yesterday. So please do watch this video until the end, because I believe that you're going to definitely like what I have in store for you on today's video. Otherwise, please know that I'm not a professional financial advisor, meaning that all that I'll be discussing here are just my opinions, and if you seek professional financial advice, you already know what to do, and that is you need to go and consult the professionals. Otherwise, just as I've told you that online shopping in South Africa has been increasing, Woolworths just announced a 118% increase in online food sales for their 52-week that just ended on the 27th of June 2021. Now, this breaking news came in yesterday, and before we break them down, to the benefit of those that don't know what Woolworths does, well, Woolworths is a retail company that operates through 7 segments, like your Woolworths Food and Woolworths Clothes, just to mention a few. And this is the company that just announced 118% of online food sales, which I must say that when I read those kind of news, I was very impressed about this company, because you remember that it reported this kind of breaking news amidst or in the midst of the pandemic, which is something that is truly amazing and ought to encourage you to want to look into this company. Because if this company, guys, when other companies were complaining about the pandemic, when other companies were complaining about them not generating enough revenue, it looks like this company was cruising. This company was doing so well. Now, this 118% of increase in their food sales segment, they indicated that it is approximately 2.3% of the entire food sales in South Africa. Now, I mean, this is very good if you're to look at the number of companies that supply food in South Africa, or the number of companies that sell food in South Africa. This is just truly amazing. For Woolworths to be able to constitute 2.3% of the entire food supplies in South Africa, then that is truly amazing and ought to encourage you to want to look into this stock further and see and check if you can put in or have it in your portfolio, because it looks like this stock is doing so well. These kind of sales, or this 118% online sales increase, thrashed that the online sales they had reported in 2020 around the same time, which is something that ought to open up your eyes and see if you can add this stock to your portfolio. This is one of the main reasons Woolworths saw a revenue increase even on their interim financial results that they reported, which ended in December of 2020. This is the same reason that we are seeing Woolworths reporting or indicating that for the 52-week that ended in the 27th of June, meaning that for their entire financial year, this company reported an increase of about 9.7%, which is so good when comparing it to the sales increase they had reported last year in 2020 around the same time, which just like I'm saying, guys, ought to open up your eyes to say that this is a company that was able to do better or to do well amidst of the pandemic, which is something that ought to open up your eyes. But here's the good thing, guys. It is not only their food divisions that grew in sales or that generated them some good revenue during the 52-week period, but even their fashion, beauty, and home business grew by over 114% in sales, which is something that once again is truly amazing, because this tells us that not only is Woolworths performing or doing good in their food sections or in their food segment, but it is also doing good in other segments like fashion, beauty, and home business, which is something once again that must encourage you to go and look into this stock, because it is doing so well, or it did, or it performed so well again throughout the pandemic. Now, as I've said, Woolworths reported a 9.7% of their entire group, which is a very good sales growth. And as I've said in the beginning of this video, to say that large cap stocks, if they are to bring or generate a sales growth of between 5 to 10%, then that ought to be taken as a good sign to say that this is a very good sales growth, meaning that their services and products that they offer might be or will be in demand even in the years to come. Now, these Woolworths, guys, generated an overall sales growth of about 9.7%, which is something that is truly amazing, as this is considered to be a very good or a good sales growth, which is something that also has to encourage you to have a look into this stock and to see if you could spare a penny and invest onto this stock. Now, from their latest interim financial results, which ended in December of 2020, this company indicated that for that period from June to December, they indicated that their turnover was around 43 billion rands, which was a 5.3% increase when comparing it to the turnover they had reported in the previous year, which was around 40.9 billion rands. Now, this company reported an adjusted profit before tax of around 2.7 billion rands, which is a 24% increase from their adjusted profit before tax of their 20 weeks interim financials of 2019, which is something that, again, it's a very good thing, which ought to encourage you, because I mean, a 24% increase of revenue or profit, that is a very good thing. Now, this company reported an adjusted diluted HEPS or head earnings per share of around 193.7 cents per share, which was a 19.4% increase when comparing to the headline earnings per share they had reported in 2019 around the same time. Now, this is a very good thing, because this just simply means that this company is becoming more and more profitable. Now, this is the very same thing that investors want to see before they invest into a company. When they see a headline earnings per share or the HEPS of a company increasing, then they take that as a very good sign to say that this company is becoming more and more profitable, meaning that this is a very good company that they would consider investing in, because it is doing good, it is improving in terms of generating profit, which is something that you ought to also consider. Now, this company, guys, for the period which ended in December of 2020, they reported a free cash flow of around 3.5 billion rands, which made a 1.6 billion difference from their free cash flow they had reported in 2019 December around the same time, which was 1.9 billion rands. Now, this is a very good thing, because this just simply means that Woolworths currently has a good free cash flow, or a higher free cash flow than the cash flow they had in December of 2019, which ought to be taken as a good sign, because remember, a good free cash flow just offers a highest level of liquidity in terms of covering short-term obligations and operating expenses. Now, this is one of the companies that I truly believe that it will do very well in the future. And the good thing is that it's not only one segment that's doing so well. There are other segments that are doing so well. Like, it's not only the food segment that's doing so well, but we've got fashion, beauty, and others that are doing well, which is something that ought to open up your mind to say that this company it's doing so well. Otherwise, with all that, guys, I certainly believe that this Woolworths, it's a very good stock that we might see this revenue growth continuing to increase irregardless of the pandemic, which is something that ought to open up your eyes. Otherwise, with all that, guys, I make tons and tons of stock market investing videos, and if you think that this video was amazing, please don't forget to hit that like button. If you're new, please don't forget to hit that subscribe button and click on the notification bell so that YouTube can notify you every time I release a video. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey, and God bless you all.